This chapter is mostly about fixed assets or property, plant, and equipment. Things that are included in here are usually the big things in a business, like the land, the buildings, the machinery, any other equipment, vehicles, the things that help you do what you do as a business. And again, these are referred to as fixed assets. Now, one thing you do have to distinguish between is what is a fixed asset and what is inventory. So, a vehicle for one business, which they use to drive around to different clients, could be inventory to a car dealership, and they are treated differently. So, what we are focusing on is the fixed assets that we use within our business to help us do our job. The first thing that we need to look at is what does it cost? And while this on the surface seems pretty cut and dry, it isn't all the time. So if you say a building cost you $200,000, what does that mean? What's included in all of the costs? So let's take a look at installing machinery in our business. There is, of course, the purchase price of the machinery, but we also have to include all of the costs that are used to get the machinery ready to use. So not just the purchase price, but how much did it take to deliver it to our location? Complicated machinery can have installation and setup costs, and then we need to test it and calibrate it, and then anything else that might be used to get it ready for use. So until we get to the point where we say, all right, we're ready to turn this on and start using it within our business, all of those things are part of the cost of the machinery. So it's not just the purchase price. And where do these costs show up? If you're doing a journal entry and you're saying that I had to spend $1,000 delivering this machinery, the journal entry would be a debit to machinery and a credit to cash or accounts payable or however you paid for it. So all of these costs are debits to the machinery or to the equipment instead of to some sort of expense. And ultimately, these things end up on the balance sheet under the property, plant, and equipment section. Likewise, let's look at buildings and land. So again, anything that gets it ready for us to use in our business. One of the more difficult concepts is what is here we go. So what is a land cost and what is a building cost? If you are purchasing a piece of land or something to build a new building, when you pay for it, you might have to figure out, all right, what is the land cost and what is the building cost? Now, why is this important? It's because land costs and building costs have different accounting rules down the road. Specifically, land we do not depreciate and buildings we do. If you go back to a previous chapter when we were talking about depreciation, land we never depreciate. We never make a journal entry with depreciation expense, and buildings we do. So it's very important to figure out what is the cost of the land and what is the cost of the building. So the things that go into the cost of the land are what is the contract price to buy the piece of land. If there are any old buildings on there that you don't want, then you demolish them and you cart them off. The cost of doing that is also considered part of the land because we are still getting the land ready to use. Then we also might clear and grade the land. So all of that is still getting the land ready to use. At that point, we're now ready to start digging the hole for our new building. Once we hit that point, we start digging the hole for the new building. Now that's part of the building costs. And you can see that on the graphic here, that once we start digging the hole or beginning excavation, now we switch from debiting land in our journal entries to debiting the building in our journal entries. So cost of the building might include excavation, foundation and structure, all the construction. And if you are going further in accounting and taking accounting classes and, for example, intermediate accounting, you'll also learn that, well, maybe we had to take out a loan and include some interest in there. So all of those things, until we get the building ready to use, are part of the cost of the building. All right, some other things that you may not have thought of when purchasing something are, let's say we are buying an existing building instead of building a new one. We buy an existing building. It's not just the contract price, but it also might include taxes and fees and title insurance and a lot of other things that until that we have to pay. And until that building is ready for us to use, all of those costs are considered part of the building. So this concept of cost in this chapter is not just the contract price, it's whatever we have to spend to get the asset ready for us to use.